Hey, hi everyone, and welcome to today's monthly webinar. We're up to obviously May this year, and we've just gone over an election weekend. So I'm joined by always by CEO and co-founder of SMSF, Aaron. So welcome, Aaron.
G'day, Jeevan. How are you?
Oh, look, could be better, maybe, but or could be worse. So
We had a public
ready
holiday
to.
up in Queensland yesterday too, so that
That's right.
makes for
That's
a
right.
great long weekend.
That's right. So I think plenty to talk about as always. But so today's session is recorded. So if you do drop out or miss any parts of it, you will receive a link to the recording, and all the prior recordings are available on our YouTube channel. If you'd like to ask any questions, please enter them there in the Q&A panel, and Aaron and I will cover those off towards the end. So the format, if you haven't sat in one of our webinars before, I'll give an update on what's changed in BGL's products since our last update. Aaron will do the same in terms of the SMSF industry and Smarter SMSF, and then we'll cover any Q&A at the end. Okay, let's get stuck into it. So for Simple Fund 360 and Simple Invest 360, we've released two updates since the last webinar that we do. I'll just cover off the major new features, and we've got an update coming out there in a few weeks' time. Okay, so the first one there is around the new menu that we have released. So this new menu has been designed using analytics that we have got out in terms of which are the commonly used screens. We also looked at a lot of flows in terms of how users actually navigate between screens, and I guess built this actually menu structure just purely using analytics. So a lot of it's purely structured off that, and it's still, I guess, a work in progress. Jumping across now into Simple Fund 360, if you'd like to utilize this new option, if you go to the app switcher, which is found in the top right hand corner there of your screen, and you'll see an option there for settings. So this is newly there under user settings. So what we have done is created this page, which is purely user-based settings. So it's not something that we've actually enabled in the past that we're looking to obviously expand as we go forward. But if you'd like to have a look at the new menu, you have an option here to enable this option here, and then you'll need to, in some cases, it depends on the browser you're using. We do force an auto refresh, and in some cases you need to refresh the browser in order that to take effect. And what it will do is there on the left-hand side is actually change that menu structure. So if I go in and select, let's say, one of the super funds, oops, on the screen. If I go back and, sorry, I've got the wrong one. If I go into and select one of the screens here, funds here, you actually see then all the menu structure there has actually changed. And as I said, that's based there on the analytics that we have done. So we are looking, obviously, we're still capturing more data based on this. And if you do have any feedback on this, please enter it there into the feedback icon there on the right-hand side. We are collating all that and looking to make some changes in the future there. And the same thing in terms of trusts and companies, you'll see a slightly different menu flow depending on the entity which has been selected. I'll just go back and select one of the super funds as we go back there. Okay, next one there is BGL ID. So what we've actually now done is added this into both Simple Fund 360 and Simple Invest 360 as they do share a obviously contact screen. So what this will allow is for firms now to I suppose perform an identity check on both their clients coming in. So at the moment this is based on an individual basis, and we are looking of how we'll run this out across non-individual structures in the future, but especially for new clients or existing clients that you'd like to identify. Obviously, with the TPD changing their or providing guidelines last year and changing the guidelines out in terms of identification, we are seeing overseas a lot more tax structures now mandating a KYC check. And I guess Australian government does have some draft legislation in terms of KYC checks, and that does obviously include accounting firms and bringing them into scratch as well. So as you can see there on screen, depending on the type of client, so I'd say a vast majority of your client base would fall under that first category there, which is just simply the Australian government ID check there. Ones that are involved with sort of politics or larger firms, international companies, you can obviously go ahead and do further checks based in, or if it's a high net worth client, you can go through and perform, I suppose, high checks going through further into that. So in order to obviously utilize this process, you can find it there under the contact screen. If you go through and select a particular contact, down the bottom right hand corner there's two things that do take place. You do have there a help check in terms of what is this, and do have the ability to go through and add the actual service and the actual requests. So with the actual widget request, I haven't actually enabled it to this firm, so I can't continue at this point in time. But you first of all is adding a payment method so that the options will be direct debited off that actual payment method. And then there's two options that will provide through for that particular, I suppose, request ID. The first is actually an email being sent to the client, where the client will actually enter in all their ID or their ID details, which are actually then obviously not seen by BGL. They're just input straight into the payment identification system and actually process through, which is where the vast majority of clients we expect to use. The other option is actually entering those details in yourself, sending those off, and those details would then be deleted upon a later request. In either case, we don't retain copies of any ID informations. We don't want a case of the Medibank type scandal where actually details of credentials there are stored long term and when they're not needed. Okay, next one there is our new lodgement screen. So we've actually added the lodgement screen to begin with, and I'll just navigate across to that first to explain what the plan is there. So you can see there on the left-hand menu on there. So what you'll see, depending on whether the old or new menu, there'll be two options there, lodgement and lodgement new, which obviously you're going to click on the new one. So I guess the existing functionality is very, in terms of the look and feel, it's obviously different to the previous screen. We've actually encapsulated and included all entity types where that wasn't available, previously. In terms of the actual lodgement details and everything in between, you can go through and filter there on the previous years. And you will obviously see in terms of coming soon, what we will actually download in Connect Through is through to the ATO and download that same information as what you see there on the tax agent portal. So for all of your entities that are in BGL, you're able to see all the form types and the actual status as per the ATO, which means you can get more up to detail lodgement stats, regardless of whether, let's say, for example, if you lodge the BAS returns outside of BGL, it'll still mean you can get all the lodgement stats here directly in Simple Fund 360 and be able to still utilize, for example, the workflow functions. So you'll see this rolled out in a few different stages as we do go through. Obviously, things like the lodgement status report, if anyone doesn't know, this will give you information there based on all the, I suppose, the actual tax agent themselves, the actual year, what status you want, etc. You can even export that out to Excel for those that want to manipulate that data further. Okay, again, so any feedback on that new screen, just click on the feedback back icon and submit that through to the team. Okay, so that's covering everything that is, I suppose, the major changes in the last few releases. What's coming soon is we will allow onto the property dashboard the ability to issue invoices where the property is self-managed in terms of an agency or tenant management. And you're able to issue and track invoices for just properties. So that should be released very soon. Oops, good through. The other one is Macquarie bank statements. So we were hoping to release that last update, should go out in the next one, where you are using BGL Bank Data Service. Macquarie will issue a statement at the end of each 6-month period, and they will automatically upload it onto the document screen and the workpaper screen for those related or specific entities that are utilizing that service going through. The other thing in the next couple of updates that will going out, which I'm going to slide there for, is obviously the tax changes for 2025. So there's obviously at the moment there's no, I suppose pending legislation coming out, which Aaron might talk about. There's no changes to the SMSF annual return at the moment compared to the previous year, but there could be some last minute changes. Aaron, I'll pass over to you to talk about what's happened, I suppose, specifically over the weekend too.
Excellent. Well, thank you, Jeevan. Yeah, it was a very interesting weekend on the policy front, obviously, because we have the Labor government that ultimately has found itself re-elected. And ultimately, I'm sorry, I'm just trying to get myself to be able to move this slide across.
Should do now.
Yep, perfect. Excellent. Thank you. So the main thing, as we all know, is that Albo's back. And what that means from a self-managed superannuation fund perspective, specifically, because we know that this is where the large majority of this legislation was targeted, is Division 296. So it goes back the best part of probably 28 months. We saw these measures originally announced, and much to the work that had been done within the industry had held at bay, obviously, these laws and the views and concerns that were obviously raised throughout that first term of government about the unrealised capital gains, inclusion of that, the lack of indexation, etc., etc. The problem that we now have is that this was very clear in the way that Labor was progressing forward with these measures and the views that it was only going to impact 0.5 of 1% or 80,000 individuals. And they have, ultimately, they've banked this revenue already. And we've seen that through an announcement in the not the last budget, the one before, so the May of 2024 budget, where they in essence introduced superannuation on paid parental leave as one of the commitments for the Greens to give them passage on this particular measure. So now ultimately this is a matter of when rather than if this legislation will go ahead. And I say that because not only does Labor control the House of Representatives, and they've grown that footprint quite clearly, they now collectively with the Greens also have control of the Senate. So where we saw prior to the election, there was a voting block of crossbench senators, and they needed to get 3 of those on side to in essence get it through. Those crossbench senators, they don't need in any way, shape or form going forward to be able to get this sort of legislation over the line. Now, what is interesting to note, and this has been a position of the Greens prior to the election and then clearly throughout the election campaign, it is their intention that they wanted to reduce the Division 296 tax threshold from $3 million down to $2 million. So what will we see when it comes to this particular discussion, when the bill will get reintroduced into Parliament? And I suspect that reintroduction of that measure will happen fairly early. And I say that because I believe that this is a piece of legislation that they now say we have got the imprimatur of the Australian public to be able to do this. And, they've re-voted for us. They knew that this was on the table. And there's no backlog that they have to work through currently within the Senate because quite clearly, at this point in time, any bills that were unresolved were in essence thrown in the bin. So from my point of view, again, it becomes a matter of when rather than if. But then it is around, well, will we see any targeted push by the Greens for them to try and reduce that amount down from 3 million to 2 million? I personally think Labor will push back on that, but would it then form some other type of negotiation because the Greens already got that previous bit of legislation through around that paid parental leave, superannuation on paid parental leave, as I'd spoken about earlier. And then it comes down to the timing, as I said, because the original legislation was slated to commence on the 1st of July 2025. We wouldn't see ultimately these laws, or this bill, I should say, go through both houses of Parliament before that point in time to effectively allow for that. So therefore, would they be bold enough to try and, in essence, retrospectively backdate that to a 1 July start date, which would therefore give less than 12 months to make all those changes, because the Division 296 tax legislation does take effect at the end of that first year. Okay, so likely we would see a 1 July 2026 start date, which means we've got to get to the end of 2027 to work out what that incremental change in the value is of those individuals above the $3 million amount, or whatever that amount might ultimately land. If it got down to 2 million and the Greens got their way, well, we're also going to see at the 1st of July 2025, the transfer balance cap increase to that level as well. So it will be interesting to see what happens here. Quite clearly, Labor will feel as though they don't need to make any changes to the concerns that have been raised. And off the back of that, once it gets to the Senate, it will then just come down to, well, will the Greens give it the passage that they wanted already? Or do they want to sort of dig their heels in to get something else? We don't know at this point in time. And then until we actually get that draft bill, or that bill, I should say, that's been reintroduced, we won't again get an understanding of when that start date will actually be as well. So naturally, within the last 24 or so hours, we've had a myriad of questions around all this and whether people should be acting on this and so forth. I think the short answer is just cool your jets, tell your clients to cool your jets. Jeevan and I were kind of joking earlier about, I hope you didn't throw the code out. We've made changes, obviously, to things like our PDSs and so forth around these things. So you never throw this stuff out because you never know what might happen. But ultimately, the conversations with your clients is that you should be forewarning them that there is the potential or likelihood that this will resurface. And if you haven't done any work around this, you can start to contemplate what that work might look like. But acting on this before we get law, you certainly wouldn't be doing anything in that regard. So, you can, in my view, certainly have the conversations, be tempering expectations with clients. But until we have stuff that is wedded into the law, into the Income Tax Assessment Act, don't move at this point in time, but again, just start thinking about some of those particular issues. The other thing that I just wanted to remind people on, and this somewhat, or not somewhat, does relate to the Division 296 measures. So a couple of times I've been speaking here about the fact that we have, with these measures, every account balance within the superannuation system will need to be measured at a total superannuation balance perspective. So what does that mean? It means that if you have an account-based pension, if you have a market-linked pension, if you have a defined benefit pension, all of these pensions are going to have to be valued to their market value at 30 June every year. And this is the premise as to why the government is providing this commutation amnesty to exit market-linked pensions and these complying lifetime and fixed-term pensions. Because even if you have a client that has a lifetime complying pension that might have $40,000, $400,000, it doesn't matter. It is going to have to arrange for a calculation to be done that determines its value at 30 June to work out whether the fund is subject to Division 296 tax or not. So there's going to be reporting functions that are going to have to be updated, or information in the SMSF annual return to incorporate this information. And for those that have defined benefits, they're going to need to get an actuary to calculate what that amount is. And it had previously been implied that that would be done on some sort of family law calculation that is there. So the impact of the decision or the election that had occurred on the weekend may actually fast track some of the decisions that may need to be made in respect to this, again, subject to the timing of when those Division 296 tax laws may or may not happen. So we've got a number of things that we've done. We have now added into our BGL document platform that you can access from within Simple Fund 360, the Legacy Pension Hub that we have on our own Smarter SMSF platform. You can see some screens there on the slide that gives you the ability to not only access things like our calculators, the forms, whether they're the online forms or the manual request forms, the webinars, and you can see there that Jeevan, myself and Tim ran a webinar last week, I think it was, Jeevan, on the legacy pension conversions. So if you have clients impacted by this and you didn't get a chance to watch it or you want to watch it again, it is available on the BGL YouTube channel. And Jeevan has thrown the link also into the chat for people to be able to access as well. So again, interesting off the back of the decisions that happened on the weekend, that there is also a flow-on effect into this area as well. And I guess the last thing that we just wanted to touch on, many of you are probably still working through lodgements at the end of the year. We are getting closer and closer to our due date. But one of the other aspects that we spend a lot of time on at this time of year is around tax planning. So we do have our tax planning, SMSF tax planning webinar coming up tomorrow. So if you want to find out more or take advantage of joining us for that upcoming session, it's an hour and a half. Accredited for all people. We both have the live webinar or also the webinar recording. And we do also provide a tax planning checklist, SMSF tax planning checklist and strategy guide or reference guide in essence. So that is included as part of this. It's about, I think we've built it out to about 38 pages now with both the checklist and the reference guide. It's a great reference guide anyway, above and beyond the tax planning. As BGL clients, you will get a 20% discount if you want to purchase the webinar to attend or the webinar recording. You can see on the right-hand side there, just apply the coupon code BGL Tax Plan 25 when you go to purchase. So, Jeevan, that is